then feel free to post that in the comment section, or the chat. Otherwise, we'll look at basically previous week's kind of price action, the days that I was interested in and took some trades on. And then as we go on, if there's any questions, we'll definitely answer those. So Friday's price action, obviously we had NFP this entire week. I was not expecting a whole lot of moves and a whole lot of entries. With the economic calendar basically stating we had bank holiday on Monday and then NFP protocol. And we had 10 a.m. news kind of sprinkled throughout there. I was only looking at maybe 1 or 2 days max. And that was Wednesday of this week and yesterday, Friday, given the profile. So when you're comfortable with the economic calendar and you know exactly when those setups are formed, if you can study that, it's extremely beneficial because you know exactly what days you need to show up, and the days that are low probability, maybe you have lower expectations going into the day, maybe you only scalp, or maybe you just decide not to look at anything. So Friday's price action, I was bullish going into the morning, and I'll try and show you why. We had that pretty classic. So we had daily imbalance here in, I think his short-term discount, we're pretty close to it. Dipped into it, obviously filling it kind of below 50%, and then we traded all the way below it in London. So for me, it looked like a pretty classic London low of day, and then expansion up into, I was favoring actually the buy side of here, and then obviously the relative equal buy side from previous 2 days. So as we were expanding, you can see 830 also failed to manipulate. So notice how when 830 news comes in, if we're looking at the kind of the 3 time frames of 830, 930, and 10 o'clock, typically one of those needs to manipulate. So if we get it at 830, normally 930 will expand. If we get it at 930, then 10 a.m. will expand. If we get it at 10 a.m., which is pretty rare, normally only if you have a 10 a.m. news do we see 10 a.m. manipulation. But then you can see expansion sometimes after that going into silver bullet hour. But 830 here fails to manipulate, which should have been a sign for me that 930 was going to. And then here we have SMT between the highs at PM session from previous day. So that's going to be extremely important. We also dug up into this internal range for value gap in a short-term premium. So pretty classic, I guess, if you are familiar with these kind of days. Internal range and premium with the SMT, we're going to seek sell side, mostly time-based. So we did have the London session low as a liquidity target on both YM and ES. So that's going to be, we can kind of just mark out that short-term low there and target that. And then also if you look at the time dynamics from Friday, everything played out pretty well. The only thing that didn't was the fact that we had slight SMT here too as well with ES. I wanted NASDAQ to really spike up here and then trade lower, and I probably would have seen that as a better reversal, but that's something I also got to study. And we broke down, obviously displacing through bullish PD rays, and if you're struggling with finding, okay, what's the order flow likely to do in the morning session, then the 5-minute is going to be probably one of the easiest ones to look at, and probably the only one that I really trust when I'm looking at what's the order flow and how do I frame a setup going to the morning. The 5-minute order flow. So are we disrespecting or respecting high probability order blocks and inefficiencies on the 5-minute chart? So once we got this 935 candle that really slammed all the way through this order block and really dug all the way to the discount end of this imbalance, that to me was kind of tipping its hand. I couldn't tell if it was just a deep retracement. We're going to expand again, but with everything else in line, traded back up into here, right around 947, broke down, and then within the macro time, we dug up into this inversion for value gap, which is where I entered short right around, I think, 953 or 954, and then targeting the data lows, which is technically time-based, and then that swing low from 515. And you can see the time we put in the low of the session here is between our time frames of 10:30 and 11 o'clock, which is our normal protraction, or not protraction, but normal time dynamics between 9:30 and 10 o'clock. You form that high, And then 10:30 to 11, you form the low, and there's your open, high, really tiny manipulation there with the SMT, low, close. And if you go over to ES, I think it was probably one of the most textbook models we got probably for the past couple months. Here's 10:30. But manipulation drops down, 2022 model trades back up into the bearish order block and the breaker and the fair value gap in premium. Right around 947, and then we break down, continue into sell side pools in discount, and then eventually London low right around 1030-ish. So if you're trading ES, it was actually pretty easy, I think. If you're familiar with 2022 model. Other than that, Wednesday's price action was decent. It was a little bit more difficult since it was a 10 a.m. news day. Thursday, I'm not even going to look at it. I went over it on the stream, so if you want to go back and watch that, you can. I was not even looking at price action on Thursday. Thursday before NFP is always going to be difficult, and your mind is going to play tricks on you, and you're going to think that, oh, there was a setup on this day, and there was something that you should have been looking for. I blatantly disagree. Every day is going to look like a high probability day until you take a loss. So knowing which days to just avoid and not try and use the hindsight bias in your benefit is going to be important in your growth mentally and in trusting the model. So yeah, you could have maybe seen this as a long opportunity. I wouldn't have. We just took 3 buy side pools and then dipped into a premium. I'm not looking at that as a long time dynamics. We have 1027 putting in the highest, 3 minutes off, displacement all the way down the sell side. So Thursday is not a day you should be looking at on NFP week. I don't care who you are. For me, that's just something that I'll disagree with. I really think there's going to be most days you can be trading, but the day before NFP is something that it's like one of the worst days, arguably, during the month. You're going to avoid one day, at least avoid that day. Then Wednesday. So consolidation all before 9:30. Typically, whenever you see consolidation between 8:30 and 9:30, or 9 o'clock and 9:30, 9:30 will manipulate that range going into on the rest of the session. So failure to manipulate here, you can see all these relative equal sell side pools, fails to manipulate. We trend up. The bias was bullish on Wednesday. I can see if I can pull up the screenshot from Wednesday's bias. What day was this? The 4th? Oh, there's no screenshot. PM session ERL is the only liquidity pool I would like in this scenario, but still a decent ways away. I don't know if, it's up here. So that was the drawn liquidity for me. 10 o'clock news comes in, manipulates all the way lower, taking out this pool, taking out this pool, taking out this pool. We also had SMT between here, which is crucial, extremely, extremely important. We cannot have an SMR without an SMT. Then we start to trade back up. Obviously, you can use your standard tape reading, discount premium, PD rate right there in macro time, post news, nice entry long, and then just targeting new time. So you have swing high there, broken at what time? 10:30. And then eventually we have an hourly. If I go back here really quickly, we have an hourly premium PD rate, I believe. Really just this. If I go to the 60-minute really quickly. This inefficiency going from sell side to premium or ERL to IRL. There's your inefficiency, and we tag it right at 1055, which pretty standard, I think. And then Tuesday, I don't know if I even looked at it Tuesday. Yeah, Tuesday it just wasn't optimal, I think. I tape read it off stream just to see if there's any moves. I stayed flat just because there was nothing really in here that I would have seen or liked in hindsight. And you must dictate what you want out of the market. You can't let the market dictate it, right? So if you don't get exactly what you want and it's not within the realm of high probability trades for you, you just avoid it. And that's something that I had to learn through a lot of trial and error. But being comfortable kind of staying flat is extremely, extremely important. So on a day like Tuesday, we're coming off of a bank holiday. We have 10 a.m. news. We have NFP protocol. That's going to be a lot of things kind of pairing up. You're already expecting low probability conditions. And then when you don't get exactly what you want, which I was actually bullish on Tuesday, I was expecting this was going to be the time low. We never got displacement here. 10 a.m. news came in, wicked the low. After that point, I was basically like, there's nothing in this I could see. It's high probability. And on these kind of days, especially when you're flat or when you don't take a trade or when it's a low probability day, the last thing you want to do is when the session is over and you go back in and you screenshot the day is try and go back in and argue, oh, this is an order block entry. I could have taken that. When in reality, it has nothing to do with your model. And what you shouldn't do is you should not change your model based on one setup kind of being slightly different. If you have a sample size of maybe 3 to 5 different opportunities that are on a high probability day that you missed out, then yeah, maybe you can consider changing things up or maybe adding things in. But on a low probability day, when it's like like this kind of entry here, yeah, it's during macro time. It trades up into a short-term premium. I'm not going to see that. I don't care any day of the week. I'm not going to see that probably as a short most times because that's just extremely difficult, at least for me. And I know in hindsight, with that benefit, I still probably wouldn't have seen this. And I'm going to be honest with myself of, I'm going to miss that move, which is fine. And even on a day like maybe NFP or on Wednesday, the days where okay, I didn't see it live, and even with hindsight bias, I probably wouldn't have that's still kind of difficult. That's when you can start to improve and you can refine down your model to a really, really effective way of looking at it. So you don't trade the day before NFP, even if it looks like a setup is forming. Does that also apply for FOMC? So I don't even open the charts on Thursday, preferably of NFP week. Like the days, I've tried and program myself for the days that I know there's not going to be anything high probability. I either don't even turn my charts on, or I'll tape read it off stream, and just have some music playing and just kind of watch it. Just because I don't really have, I still like, this is like my passion. I still like watching it, but I know myself better than to try and trade something. So for my own rules, like think about it. Are you going to trade a setup in London if you're only watching the New York session? No, I would hope not. So anything outside of your model, your time, the time of day, the time of the week, the price action, all of that stuff, if it's outside of your model, it's noise. So just like how if you wake up in the New York session, you don't look at the London session and be like, oh, I missed that move. I should have caught that. I hope you don't. If you do think like that, then you have to definitely start to refine down the mental and refine down a model. But same thing on the day before NFP. If I see an entry there, I'm not going to be like, oh, I should have taken it, or oh, I'm gonna, because that's trying to trade the P&L over trading the execution and trying to build good habits. So if you focus on building good habits and becoming an actual trader, right? Becoming the identity and becoming the person that is a trader rather than trying to make money, that's when you actually will make money instead of the opposite, right? When we try and chase the money and try and chase profits and it kind of always fleets, it leaves us, right? You never find it. It always is more difficult than you expect. But then when you focus on showing up, doing things that are necessary to succeed, and actually creating the habits that will prolong your journey in this, then that's when you can find profitability. So for FOMC, normally the day before is fine. The day of FOMC, I like to avoid that as well. CPI, the day before CPI is like, most times it's going to be a little bit more difficult, but you can find maybe a scalping entry. But NFP, out of those 3 big high impact tier 1 news drivers, NFP is going to be the day before. It is going to be probably the worst one. So I like to always avoid the day before NFP. I don't care if there's 8:30 news. There was 8:30 news on Thursday. Still does not change the outlook for me. I have YM as one of my charts, but I usually only track targets on ES and NQ for SMT, especially as YM tends to move quickly in the opposite direction. How do you use YM? I basically use the same thing. For my SMTs, I'll use strictly, this is actually kind of out of the ordinary, but ES and NASDAQ are going to be the 2 best for SMT. I agree. 80% of the time, I would say even 90% of the time, your high probability SMT is going to be between these 2. Now, the times I would look for YM for SMT is if there's if there's time-based liquidity SMT, meaning if there is London session if you can't find anything on ES and ES and NASDAQ, and then London session on YM was obviously manipulated at 9:30, I'll use that as potential SMT. Or something like previous day high, where there's a lot of liquidity, where if YM is sweeping that and there's still an understanding that, okay, we have a bearish bias or something, then I'll use YM for SMT. So it's got to be time-based. It has to be a session. It has to be previous day, previous week, something of high liquidity importance for me to even consider that. But no, most times it's going to be here. And if it's not obvious there, it's going to be somewhat low probability anyways. But yeah, then I'll refer back to YM. If there's no SMT, then we're either a continuation day or I'm not touching it. You show the settings of the session indicators from the bottom of your chart. Yeah. Oh, I have to send this to Luke as well, actually. Let me screenshot this. Let me send it in here. Oh, Luke's in here. Oh, you can download these if you want. Obviously not super important, but if you want them, there you go. They're kind of stacked on top of each other. If you want to, if you click on the sessions by Nephew Sam indicator on the top, it'll kind of overlay it on this. All you have to do is right click on the little three dots, or you have to right click, but click on the little three dots and then click move to new pane below. And then we'll put it here, and then you can just drag it down. Yep, no problem. Which are the other two red folders apart from NFP? There's a ton of different red folders, but the tier 1 releases is going to be FOMC and CPI. So FOMC, CPI, NFP are like the 3 biggest ones that'll move the market the most. But yeah, there's a bunch of red folder outside of that. And I look to really trade any of them, to be honest. Obviously, it's going to be basis, but general rule of thumb. How do you use the macro in your strategy? For me, it's just an entry window. There's nothing specific I'm looking for it other than the usefulness of the time of day. That being said, based on the day of the week and based on the economic calendar, I'm using different times to enter. So if we have 8:30 news, I'm looking between 9:30 and 10. And I'm sure you've already heard me say this if you've been on the streams before, but 9:30 days, meaning if we have no news, so no news, then I'm looking at the macro time, the 9:50 macro specifically. And then if we have 10 a.m. news, anytime post news. Now 10 a.m. news is going to be the most difficult because it just requires, at least for me, it requires the most amount of focus and kind of arguing back and forth with bias, because sometimes you can find entries before 10 a.m. I don't like it. Most times post news is going to be the best case scenario, especially if you look at something like Wednesday. We basically disrespect the entire order flow going into 10 a.m. and then after 10 a.m. we have a nice entry. So the macro for me just serves as a entry time, a window of time where I know there's going to be a high probability for value gap fill with an order block or a breaker, and it's going to reach for liquidity after that. Set of instructions. I'm not trying to, and I guess the other thing would be the macro is either going to continue or reverse. And that's really the basics of it. Everything else is based on what's presented in the chart before the macro time, on the higher time frame and the lower time frame. From what I can see, NQ is when the price takes out London higher low, usually reverses, or if there's a fair value gap, it's a continuation. But if the price takes out London higher low before your session, do you still look for an opportunity? If New York, if prior to 9:30 we have both London high and London low swept, I'll still look for an opportunity, but I'm also considering the possibility that it's going to be seek and destroy. So we may have difficult price action. Normally when that's the situation, I'll try and wait for the first opening range to take place. So I'll wait for first 30 minutes to kind of do its thing. And then kind of by then, normally it's easier to see if it's in seek and destroy or we're going to still continue. But the example like this, I'm not super worried about London high and London low being taken out. It really just depends on the day. So I can't really give you a strict example because obviously every day is going to be different. But general understanding is, yeah, if you have both London high and London low taken out before New York start, then it's going to be a little bit more difficult to frame a setup. Obviously, if that means we're trading into New York and then we purge one of them, that doesn't mean like this example here. We take out London low going into 8:15, and then by 9:30, actually this is Thursday, but you get the understanding, I hope, of if you have London low, London high. Asian really doesn't matter to me. If Asian high and low is taken out, I could care less. I feel like I'm overcomplicating, overanalyzing the market every day. Is there any specific tips you would give to help this? It really depends on, I feel like, what you're overanalyzing or what you're overcomplicating. The two biggest problems that I see with ICT traders is you have one of two problems. Either, or you have both. Either you have analysis paralysis, which means you have a very kind of over-learning kind of personality, which is fine, but you have a lot of things that you're trying to incorporate into the charts at once, and all of that stuff together kind of makes you freeze, and you have paralysis from all the data that you're getting. You're trying to flip back and forth. Do I use this? Do I use this? And it's very difficult. Or you have shiny object syndrome, which is you're always looking for the next thing, and that can pair into analysis paralysis, which then maybe you have something that works, and then you start adding things in from other people or the things you see online that you don't need, but you have this idea that the next thing is always better, when in reality you got to just kind of sit down and do it yourself. So overcomplicating it can be a wide range of problems. I would say the lower time frames, at least for me, the lower time frames are always going to be the same. Like, I'm looking for the same exact kind of lower time frame dynamics. I'm not marking out things that I don't normally use. So I'm always going to mark out, the sell side, the buy side pools. I'm marking out SMT. I'm marking out fair value gaps and order blocks. Maybe inversion fair value gaps as well, and breakers. But I'm not going to add something like a mitigation block. I'm not going to draw that out. I'm rarely going to mark out a volume imbalance. So knowing what you're comfortable seeing is going to be extremely important on the lower time frames. So like, okay, maybe you only just like marking out the fair value gaps. You don't even understand order blocks. That's fine. So figure out what you find is the easiest things to use on the lower time frames. Now, that being said, the lower time frames should be the easiest because you have an understanding of where that daily chart is likely to expand to, or the higher time frame chart. So the higher time frame chart, you can kind of get away with it being overcomplicated. Obviously, if you have a really, really clean method of just finding a bias, that's fine. I kind of pick and choose what I want to use. I kind of go over everything. I look at AM session profiles, daily profiles, weekly profiles, the daily, the hourly, the 15. But I also give myself about like 30 minutes sometimes in the morning to frame the conclusion of, are we going higher or lower? So, and I feel like I have the experience to kind of get away with that. Now, bias, if you're struggling with it, just use the daily and the 1 hour chart. Only two ones I think you should need. Once those are paired together, I think it's pretty easy to find a bias. You can then work in the 15-minute chart. And then the most simple thing you can really look for is, once you come to that bias, okay, we're likely to expand lower, then you have a general understanding that the New York session is going to have a open, high, low close. Or if we're bullish, that morning session is going to be looking for an open, low, high close. And then all the PD rays on the 1 minute chart or the 5-minute chart, whatever time frame you're looking at, you just look for this. You look for manipulation at the start. You look for some sort of a change in the state of delivery or a market structure shift, and you look for an entry along that path. So it would probably take you really gotta kind of, I guess, reflect on it yourself and see what worked for you and what doesn't work for you. But if you find that there's like a specific data point, like I don't know, like 8:30 open or 9:30 open, I used to look at those, but I realized every single time I try to utilize them, it just doesn't work for me. Like it's adding in data that I don't need when I already kind of visually understand what's going on. Does that make sense? So the things that work for you is not going to work for someone else, and the things that work for someone else is not going to work for you. So figure out, okay, if you rarely use a data point, like the 8:30 open, don't use it. Like just don't even incorporate it into your analysis, right? The only thing you really have to get good at is narrative, which is where do we come from, where we like to expand to next. And that could go for any time frame. Once you understand narrative and you understand bias, that's 90, I'm telling you, it's 90% of the work cut out for you. So you get really good at that. The lower time frames, it does not matter. You could literally mark out just fair value gaps and swing highs and swing lows, and you'd be perfectly fine. You don't need everything else. You don't need fib projections. You don't need mitigation. You don't have to mark out every single PD array, right? You don't need the 8:30, 9:30, the 10 a.m. and the midnight opening price or the true day opening price. Like it's unnecessary. And even something like this, like I would say is quite cluttered. The only times that I'm marking out everything is in my post day analysis, like when I'm going in from the top down. But even in then, I'm only marking out the things that I would see in real time. I get this is really just from the chart, but I mean, hopefully this isn't too complicated. From some it might be, but I kind of know exactly what is going on in every single one of these annotations. They're important to me. If you have stuff on your chart that isn't important, remove it. Simple as that. Everything should have a function. If you still have, indicators from when you were trading retail, remove it. Like that stuff is it's adding noise. You need all your focus you can get. Definitely a long response to one question, but I think it's a wide range problem that a lot of people deal with. So as much as you can simplify it, really it works. Hey Flux, how long have you studied IC concepts and what made you want to teach others? Been curious for a while. I've been studying it for, what is it, September now? So about 3 years. It's going to be about, it's like 2 years and like 11 months, I guess. So around 3 years. And then the reason I wanted to teach, it actually just kind of came upon me. Like I wasn't trying to teach. It's just something that kind of happened. This guy named CJ Trades, which I don't know if you know who he is. He's kind of quiet on socials, but CJ Trades back in 2022 was like one of the most influential people for me in learning ICT concepts. And I really liked the way he taught, and I really liked the way that he posted videos, and it was extremely helpful. And actually, if you go back and you watch those daily logs, I think it is some of the best content other than ICT that you could ever watch. That being said, I started to create my own daily logs of just like, here's me tape reading, because I had no way of kind of storing it. I would trade on my laptop, and my laptop didn't have a ton of video storage for like OBS and things like that. So what I would do is I would just post it on YouTube and then delete it off my computer. And then eventually here we are now where I'm able to teach, which is a blessing for sure. But yeah, it is something I'm passionate about. So I think it comes a little bit easier when you understand it and you have a passion naturally just for something, then you could teach it. And I think 100%, if this is something that you enjoy and you have a good understanding and you want to share with people, like start your own platform, even if there's people, doesn't mean it has to be public, but if it's like someone in your life that is interested in it, spend time mentoring them and kind of jumping the gap so then they can learn it faster than you, or maybe then you guys are both and can help each other out, things like that. Yeah, it'll be uploaded. I don't know if he's still in here, but it will be uploaded and recorded and posted to YouTube Unlisted, and I'll send a link to the YouTube vids so you can go back and access this if you want it. The candle you draw, is that from 9:30 or is it from the candle of the day? Oh, you're talking about the open high low close? This? It's for both the day. I mean, it's technically for every single time frame, right? This concept, and I've talked about this concept, I feel like every backtesting session, but it's extremely important. This is for both the day and for the New York session. So it's not for a specific candle. I'm looking at it for 9:30 to 11 o'clock. So about a 90-minute window. That's not the 90-minute cycle, but just 9:30 to 11 o'clock. This is what I'm looking for. And obviously you could time it too. So if you're bullish, 9:30 to 10, and then 10:30 to 11. And this to me was like, when I figured this out, this was like one of the most impactful things I think in my own lower time frame trading. Like I always talk about it, but this is literally a cheat code, at least for me. Like I hate when people say, oh, this is the one concept you need for ICT trading, which I think everyone kind of has their own opinion on this. But this alone, like once I figured this out, this was like game changer to me. It's like you can literally time the highs and lows in the session. And if you just look at these two profiles, you have basically what the New York session is going to do 95% of the time. If you have 8:30 news, you just shift this back an hour. And there it is. So 8:30 news, 8:30, and 10, etc. Is CRT theory worth studying? If you want my own opinion, I absolutely despise CRT. That's just my own kind of preference. I think it's just rebranded buy side and sell side liquidity. Other people will disagree with me and think it's great, which I'm not gonna say. If something works for you, it works, right? I'm not gonna bash any specific form of trading. I obviously think that ICT is the best, and CRT is probably not worth studying if you focus on the things that are actually proven first, and then you want to dive into the things that people have theories about. Sure, that's fine, but you always have to come into it with a clear mind and take it with a grain of salt, because if you trust, I'm not saying that it's useful, it has no validity to it, but even something like quarterly theory, and I'm sure I'm gonna ruffle some feathers there, but quarterly theory, ICT even deliberately said quarterly theory is not something that he vouches for, and it's something that someone else made who didn't create ICT concepts, and some people love it, some people utilize it, and it's like the best thing ever. I, for one, I just think it's rebranded time. Like, why are you trying to make time more complicated than it is, right? So yeah, all those kind of quote unquote off-brand concepts, you have to have a really, really good understanding of ICT concepts in the beginning, and then approach it and kind of figure out for what it may or may not have benefit for you in the end. So I would say short answer, no, but it is up to you, I guess, at the end, if you want to study it. When you backtested, for example, FX replay, did you tape read to improve your strategy, or did you take a trade to see where you went right and wrong and note that, trying to refine and gain more experience with my strategy? Okay. FX replay has its own purpose. I do not think that you should be using FX replay for more than like an hour a day. I don't think forward testing is something that, at least for me, has to be done live. So the usefulness of FX replay, I could kind of argue against. If you're going to make a model, though, or if you want to refine down a model, the easiest way you could do it, tape read. So you kind of have to go through the entire work, and this is going to be a lot more work than your normal workload of kind of just showing up and tape reading and turning off the charts. So if you're not doing this, it's going to seem like a lot, but it is necessary, I think. You wake up, or you come to the charts, whatever, screenshot, here's your bias. Screenshot, here's throughout the day while you're tape reading. If you can record it, it's best, but if you just want to screenshot throughout the day, kind of here's where we're likely to go to, that's going to be beneficial. Then after that, after you're done tape reading, you go back in, and from the higher time frame to the lower time frame, you screenshot basically everything that's useful. So for me, I'm going to screenshot the daily, the hourly, the 15, the 5, and the 1. All of those time frames, I'm marking up basically everything that's important on that specific time frame. So if there's a fair value gap on the 15-minute chart and there's SMT, I'm going to mark that out. On the 1-minute chart, obviously, I'm marking out basically all the PD arrays, the times, things like that. Then when you go back in and you have maybe a whole month of data on that specific model, you can start pairing it with, okay, what time of day does my entry form? What kind of fair value gap entry do I want to use? Or what kind of news profile do I want to refine it down? So a lot of that is done with just tape reading it and then going back in and screenshotting exactly what you're looking for. And it's just through repetition and through the experience of doing it for like literally, if you do that for a month, I promise you, you'll have a really clear model and you have a good understanding of what you're looking for, because you'll see the same things repeat. And that's how I made my own model and got comfortable with it. FX replay, on the other hand, for one, you need a lot of focus for a long time to really get really, really good. And for whatever reason, forward testing for me, I always kind of, I don't know why it is, I just suck at forward testing. Like I perform better on a live scenario of like actually watching the market print than trying to go back to old data and then hit the replay mode and then try and read it there. I don't know what it is. It's just that's my own personal preference. But yeah, go like if you want to make a model, if you want to refine it down for 1 month straight, tape read it, and then after that, screenshot every single time frame that's useful to you. Start marking up what day of the week it is and what news profile was given, and then due diligence basically for lower time frame. And by then you'll know what days you want to cut out and what days you want to look at. And a lot of that is just dependent on the economic calendar and day of week, and time of day as well. But it's all time based at that point. And then price, if it's a really high probability day, 8:30 news on a Thursday, but then the lower time frame and the price action showcases, we're in seek and destroy, then obviously the price will take priority over the time, and you still can't trade it. So like look at the time of day. Then if the price supports the fact we're high probability, then you look at trading that day. If it's low probability day, stop. If it's a medium probability day and the lower time frame or the higher time frame charts indicate it's low probability, you stop. And it's like a really clean way of knowing which days to look for and which days you want to avoid. Can you go over a rejection block and turtle soup? So rejection block is just going to be your lowest or highest candles within a range next to a smart money reversal, and it's going to be basically the wick that's formed. So like something like this is the lowest wick, and it's not really the lowest candles, but this would be a rejection block in there. It is the second weakest PD array, so I wouldn't spend too much time looking at rejection blocks. Same thing with turtle soup. Turtle soup is just buying old lows and selling old highs. It is the most difficult entry you can ever find. So I also think it's not necessary when you're looking at trying to find an entry. You can use it for tape reading. Sure, when you see it, okay, now I see a turtle soup. I know that the next value gap, whatever, is likely to be a high probability gap. Then yeah, sure. But don't try and enter on turtle soups, especially in the beginning. Same thing with rejection blocks. It's not worth annotating, at least in my own opinion, not worth annotating because it's really, really weak in the matrix. And it's also just not beneficial, I think, when you're actually looking at price action and reading it. And journaling is 100% worth it. There's no reason you should not be journaling. So you should be. Now, journaling means before and after, and for both price action and your mental. So if you're not doing all those things, then it's not going to be extremely, you're not going to find a lot of growth in the markets. So you have to be, if you want to take this seriously and you want to actually do it, then you have to be journaling both before and after. And after is going to be the most important part, obviously. But after both of price action and of your own mental. So how did you feel going into the day? What was your expectations going into the day? How did you feel while you were tape reading? How did you feel when price action disrespected the gaps that you wanted to respect and then now is going the other way? How did it feel when it hit your drawn liquidity? So all those things are important because then when you start to go into demo trading and you actually have, demo trading is really not even real anyways, but you still have some emotional attachment to it. Then you can start to refine down, okay, how do I act? How do I control these? Not control the emotions, but how do I proactively remove any kind of emotional stimulation that will promote rule breaking and bad habits to appear. I already read that. The whole foundation of the market is created by cycles. Midnight open, 8:30 New York, 9:30 for the daily candle for the week. Always looking for opening price that are time and then looking for the time for what price to do and take actions. This is the foundation of the market. Keep it simple and you'll be fine. Yeah. That's right. Yeah, like I said, if I was to just use a couple things, it would be the daily and the hourly and the 5-minute chart. And I would just look for the open, high, low, close between this 9:30 to 11 o'clock. And that's like the easiest thing you could do. You don't need all the 1-minute PD reading. But yeah, I mean, if you can keep it simple, it's the easiest thing you can do. You don't need to complicate it. And that's what we do. I feel like everyone will learn something like the 2022 model, and then we go in and we actually don't know what we're looking for. So then we overcomplicate it, and then we realize we overcomplicated it, and then we go back to it being simple. That's kind of the circle there. And so if you're in the overcomplicated phase, then you're really close. You just have to do the work which is necessary, which is actually creating a model and digging into it. And I spent a lot of time in limbo, which was like, oh, I have a model. It's going to be this macro, or it's going to be whatever. But then I wasn't like refining it down. I wasn't actually doing everything that was necessary to like find out the little parts of it that make sense to me. Like the news profile of the day. That was important for me. I was like, okay, if I know there's 8:30 news and now I can enter before the macro time, that's going to be beneficial so that I don't actually miss a move, or that I don't have emotional stimulation that's promoted outside of not taking something that I should have. Right. So all those things can be mitigated. Like emotions are not meant to be controlled. You cannot, like, people say, oh, you should be emotionless in trading. You can't really control that kind of stuff, right? Like when you notice you're in that mode of you're going to kill everything, you're going to just keep trading. It's extremely difficult to kind of manage that. So I don't think you should be managing your emotions. What I think you should be doing is managing your expectations and managing the things outside of your emotions that create the emotional response, because emotions are a signal to an underlying problem. So you may have an illusion based belief that you have, or you may have lack of data or lack of information that is now promoting this idea that you need to be doing something now, or you have to be solving a problem that is not actually a problem. It's just an illusion. Like, for example, passing an evaluation in a week. That's going to be a problem. That's an expectation that you may have going into the trading week. And then what's going to happen? Well, when you take a loss, maybe that reality doesn't meet expectation. What does that cause? Disappointment. And then there you have spike in emotions, and then you have over trading, over leveraging, all the other problems that everyone talks about, right? So if you haven't read The Mental Game of Trading, it's going to be probably one of the best books I think you could read. The Mental Game of Trading by Jared Tendler, and then probably The Greatness Mindset is up there as well, and Atomic Habits. So if you can read those 3 books, it's going to be beneficial for you. But really, it just comes down to, it comes down to self-awareness. So you cannot have self-discipline without self-awareness. I don't know why anyone doesn't talk about that. But if you don't know what you're doing wrong and why you're doing it, you can't be disciplined. So that comes from reprogramming your subconscious and then really, really kind of working backwards. So you overtraded. Okay, well, why was the reason you overtraded? Oh, because I took a loss. Well, why did you take a loss? I entered here instead of here. Why did you enter there? Because that was outside of my model. Well, why did you trade outside your model? You keep working backwards, and then eventually you come to this conclusion of, here's the underlying problem, here's the underlying illusion that I had, and then you work at, okay, well, how can I fix that? How do I actually, what's the illusion? How do I prove it with facts that it's wrong? And then how do I take the step forward into fixing that? And that's how you should be journaling. If your journaling is, oh, I took a loss, I broke my rules, it's not going to happen again, that's not enough. And I can say that because I used to do that same exact thing. It's not going to cut it. You have to be like, now if I take a loss, like even if it's a good loss, right? I'm still maybe journaling like a page or 2 pages of, this is what I did, here's what's right, here's what I can fix. If there's nothing to fix, then it's just part of it. And I kind of reassure myself that this is normal and there's nothing wrong with taking a good loss, right? So you need to go in, and a lot of it is illusions. Most of it's illusion. Like passing an evaluation in 1 week or 2 weeks, that's an illusion that you have. No one said that you have to do that. You created that kind of thought in your mind, and now you want to try and do it, when in reality, if you had taken the 4 weeks or 8 weeks that you needed to pass the evaluation, you probably would have passed it instead of taking the 12 weeks. And every week, every one of those weeks out of the 12, you have a new evaluation you're taking, right? And that's just being truthfully trying to be completely honest because I did the same exact kind of things. And I'm trying to talk in a manner of it's like these are the things that you can avoid, but then this is how you avoid them. So proper journaling is going to be a necessity and being extremely self-aware as to why you're doing something when you shouldn't be doing. Then you can be disciplined. And then you don't have to worry about emotions because you've kind of eliminated um the environments that you put yourself in that will cause emotion. If that makes sense. So if you know, okay, I'm in complete control of myself. I'm in no control of what the market does. And if I manage my risk properly, or even if I were to take 20 losses in a row, I would still be fine. That's when you can gain confidence in, okay, I can hold this a little bit longer. I can trust my model will succeed over the long term. We can fight the subconscious, but we can create rules to override it with trade what you see, not what you feel or think. Create the real alignment of your conscious bias within the real price action. Yeah. You have to really reprogram your subconscious for this. So some people will call it cringe or corny or whatever, but like writing down basically your beliefs and your how you want to what your identity should be is going to be extremely important. So like if you the way you so as a man thinks so he is, or like as a man thinketh so he is. I don't know what the exact quote is, but the way you think dictates how your life is going to be. If you think, oh, I'm an unprofitable trader, I suck at being self-disciplined, I'm terrible at this, I can never get this to work. That's how your life is going to be, and you're going to continue to, play out that prophecy. If, on the contrast, you look at yourself and you carry yourself, well, I'm a profitable trader, I'm a successful trader, I'm extremely self-disciplined, the money flows to me, then eventually your actions will follow suit of your thoughts and your words, and then your habits will follow suit, and then your character will follow suit, and then eventually you get to exactly where you want to be. And there's nothing new. You don't have to recreate any kind of identity. Like the people who are successful in trading all have the same exact, they took basically the same path, and they all became a very similar kind of person on how they look at themselves and how they look at the market. So if you just take one of those successful traders, whoever it may be, and you write down, okay, here are the qualities of that person. Then what you have to do is you have to just become that person. So you maybe you go to the gym now, or maybe you journal two times more, or maybe you screenshot the things that you weren't screenshotting before. You take those actions, and eventually within like 3 months or 6 months, boom, you're at a spot where you can't even recognize yourself because now you've created that identity and now you've become it, and now everything is kind of falling in place. So you must first think that something is possible before it's possible. If you don't think properly, you're not going to follow suit with your words or your actions. So think, then speak, and then you can act, and then those actions will get you to where you want to be. And if you focus on the process of becoming the trader and forming those good habits instead of trying to make money all the time and take profit, all that stuff is good. And the people you may be comparing yourself to are maybe on level 100 when you're on level 5. So don't go on Twitter and don't go on YouTube or don't go to the wins and losses chat in here and look at some crazy trades that people are taking when you may not, they may be studying for 6 years and you only have come to these markets 3 months ago. And you're like, okay, how come I can't do that? And you're looking at that 4-figure, 5-figure P&L and you're like, okay, I want to get there. But you have to first take the steps that are necessary to even get to 2 figures or 3 figures, right? Or even not even any figures at all, just training your mental to at a point where you can actually stand losing $3 in a demo. All that stuff is maybe things that people don't see, but are completely necessary in succeeding. And, people don't talk about that stuff, but it's like you can cut out a lot of it if you just kind of take the difficult route of just addressing the problems instead of kind of avoiding them. And the people who try and sell you like concepts that are going to make you profitable, you kind of already know that they're lying to you. But no profitable trader or successful trader is going to say this is the P theory that you need to be successful without talking about the psychology first of what it actually takes. Or maybe they leave that part out, which in reality that's You could trade anything in the world. You could be trading a coin flip, but if you have good risk management and you have good mental psychology about trading and losing, you'll be completely fine, right? If you have something like an 80% win rate, then imagine what you could do with that. And if you lower your expectations at the beginning of, okay, I want to be able to get daily bias right one time this week. That's all you need. And then eventually, okay, I want to hit daily bias 2 times right per week, or I want to tape read this amount of times per week. And eventually you get to a point where the final goal is, can you get 50 to 100 points per week on NASDAQ? If you can get 50 points per week consistently, that's it. You're done. Like you're at a point where now you are extremely well off, because all you have to do is copy trade. And imagine then, if you had 20 accounts on Apex and these guys are getting 50 points a week, you start doing the math, that's plenty. And obviously you could just keep pushing it further than that. So lower the expectations at the beginning and then kind of just compound how you think. And I promise once you get out of your own way, it's so much easier than we all kind of make it out to be. It's really simple. Developing the skill to recognize your emotions when trading will automatically take you to walk away from that current behavior of following it when it's aligned or not with your trading plan. That's when discipline comes. Right, exactly. Yeah, because emotions are the signal to an underlying problem. So if you get emotional, your first response should be, turning it off, or walking away, or just not even trading that entire day, because everyone has a mental capital curve, and it's always depreciating as the day goes on. So if I know, okay, I can only focus and have enough mental capital for 90 minutes of the day, and whenever you enter a trade, that mental capital line is always going to decrease. And once you hit 0, you can't make any rational decisions anymore. So maybe that's 30 minutes in the beginning for you. Maybe then you can extend it out to 60 minutes. So then you're always improving this. And, the best traders maybe can take 4 really good trades and then they're mentally removed. For me, it's like 1 or 2. And then once I'm like really max 2, and the max time length I'm looking at is like maybe 90 minutes. So if I know, okay, if I take 2 trades in 90 minutes, I don't think I can function the best I can function mentally in managing emotions and things like that after that. So I know, okay, that's my limit for now. So if I take 1 trade in a session on a high probability day and I take a loss, I'm fine with that. I can live with that. I can think rationally. I can turn off the charts. I can step away for 30 minutes and then come back into it, journal, maybe with some coffee and things like that. And I'm in a more relaxed state, and then it's fine. And I think if you're just starting out or if you're struggling, focus on 1 trade per day in demo. 1 trade per day. Win or lose, there's your result. Because now you have formed, okay, win or lose, I have to confront this. I can't try and hide it away with taking another trade that becomes a winner, and then I don't have to look at that loser. No, you take a win, okay, you journal it. You take a loss, you journal it. But now okay, 1 setup, win or lose, I have a result that I have to deal with. And that's what you want to get comfortable with. Dealing with those kind of results, whether they're uncomfortable or comfortable. And when you get comfortable with the uncomfortable, then you can succeed, right? If you're always trying to push it away, you're going to just keep delaying it. You have to become at a point where you're comfortable with every single possibility, and then you'll be good. One of my biggest problems is knowing when not to trade. I just can't switch off when the market conditions are not conductive. I can make good money when conditions are great, but I just can't recognize when market conditions are bad. Really could do some tips. That's a really, really like important part that no one talks about, is knowing when not to is more important than knowing when to, right? Because you could trade every single day, every single minute, and some people will kill it, some people will not. For me, a lot of it depends on the economic calendar. So that's going to be like the first thing I'm looking at. If it's a day like 10 a.m. news, regardless of the day of the week, I know it's going to be a little bit more difficult for me. And the reason I'm able to trust that is because I've gone in and I have months and months and months of this specific model and how it performs in different conditions. So once you get comfortable with that, of okay, maybe your model is I don't know, the market maker's sell model or market maker models in general, and you play the second stage of distribution. Well, if you know on 8:30 news days it's likely to be there and it's really high probability, then you can maybe execute on that. And I mentioned it earlier in the stream, but this is how you kind of frame high probability versus low probability days. So first is going to be the economic calendar. Make this a little bit bigger. Economic calendar is going to be first. Kind of pair that with day of week as well. And then you're going to be looking at higher time frame price action and then lower time frame price action. So this is the order, meaning if any of these things in the top have a reason as to why it's low probability, you don't even look at the lower ones first, the lower ones after. So if the economic calendar, if it is a Monday, this kind of pairs together. If it's a Monday and on Tuesday we have 8:30 news, but what would you expect that Monday would be? Well, I would assume it's going to be some form of a consolidation and accumulation of stops, where then Tuesday's 8:30 news or the real move can now run on those stops. So I'm not going to be looking at trading on a Monday with no news and 8:30 news the next day. And I don't even have to look at the price action on those days to know that it's going to be low probability. Now, say it's something like that say the next day, it's Tuesday with 8:30 news. Okay, well, check economic calendar. We have a nice high probability day of week, Tuesday, it's fine. Check. Now you look at the higher time frame price action. Is there a really clear bias? Is the bias clear? So this is really just bias, I guess. Is the bias obvious where, okay, it's one-sided. You can argue one side over the other, and it's really, really clear. You don't have to pull out any special tools to try and find the bias. It's just obvious to you. Okay. Then you go to lower time frame. If all three of these are kind of lined up, normally the lower time frame follows suit. But occasionally you'll have times where the lower time frame, there's nothing in there. Maybe all those things are lining up in the lower time frame. There's not any clear entry. Well, then it sucks. There's no entry. There's no entry. There's no trade. And that's some of it where it's like, it's just annoying, because sometimes it feels like, okay, you did all the work, you showed up, but then you don't get paid for it, or you don't get an entry off of it. And then sometimes it feels like it's called injustice trading, where you feel like you're owed something, so then you're going to go back into it and do something stupid. And that sometimes is something you have to address too. But getting comfortable with, okay, if I'm supposed to show up on this day and there's nothing there and I can live with that, then you'll be fine. Now, obviously, other times there's going to be on the higher time frame, maybe in here, seek and destroy conditions on the hourly chart. Well, then you don't have to even look at the lower time frame. And then one of the things that you have to realize is every day looks good until you take a loss. Like, think about it. Every single day you come to the market, it's all going to look pretty similar, where there's going to be uncertainty. So when you know that, okay, if every day looks good, then even on the days it's low probability, I know it's still going to look good, but I have an underlying understanding that maybe my model won't be there. Maybe my model will produce a loss. Maybe it'll be more difficult to read on a day like on another day that maybe it's high probability. When you use both of these paired together, then that's how you avoid not trading on days you shouldn't be, or not taking losses you can avoid. And that comes from also the first part, which would be gathering data. You need data to first know what days you're looking for or what times. And that comes from screenshotting every single time frame. So what time frame do you find bias? What time frame do you execute on? Maybe it's multiple time frames. And when you screenshot that for a month, over time, you get comfortable with, okay, 10 a.m. news doesn't really produce good results for me. I'm going to cut that out of my trading. Boom. You've eliminated a factor in taking, you're not going to take unnecessary losses. Now that produces another thing, which some people are not going to talk about, which is on those low probability days, what will happen? Sometimes there's going to be a good setup. Are you going to take that? No, you can't, because your rules state that even on those kind of days, you just can't take a setup. And that sucks because sometimes what are you going to do? You're going to find people on wins and losses, or you're going to find people on Twitter, or you're going to find people on YouTube that are posting their wins. And they're not trading your model. So they don't know exactly what, right? If we were all trading the same model, then we would all be avoiding the same kind of days. So what you can't do is you can't look at those days that are low probability and the days you avoid. Maybe you don't even turn on the charts, but then an hour later you turn on Twitter and there was a good setup that you would have seen, or maybe there's people that are taking wins. And what you can do is be like, oh, I should have, I could have, I would have. And you're comparing now the what ifs with the what is. We don't deal with what ifs. We deal with uncertainties. We're always going to be thinking what ifs. So you have to remove the what ifs from your life. You must deal with the what is. The what is it's a low probability day, and your data from 6 months of data or 1 month of data is showing that those kind of days, regardless of the price action, is going to be difficult. Therefore, I'm not going to look at it. And if there was a setup, so be it. Who cares? Right? Just like if you look at the London session, you trade the New Yorks, who cares? It's just part of it. There's always going to be a new opportunity. There's always going to be tomorrow. As long as the sun is coming up, the market's going to be there and you have an opportunity. So you don't deal with the what ifs of, oh, I should have looked at the market, or, oh, I should have taken that position. I would have seen that. I would have, right? So look how you're thinking and, oh, what if I taken that? And this is going to be extremely important. So there's kind of really long-winded answer, but I hope that kind of goes over everything, because sometimes people will say, oh, you just look at this and this is their answer. It's like, no, there's both. How do you get to this? And then what it produces after. And then when you understand everything and you're really self-aware of, okay, today's not a day that I'm supposed to be looking at, I'm comfortable with that, and you're comfortable and you find enjoyment from following your rules and trusting the process, then you don't care what anyone else thinks. You don't care what I say or what I post or what anyone else posts on Twitter or what anyone else is posting in this Discord. It doesn't matter, right? If it's outside of what you're comfortable with and you're proud of yourself, reward yourself for that, first of all. And then second of all, you simply just don't care about anything else outside of that. Once I take 1 or 2 trades, I begin to not see it clear again. I just leave the charts. Any actually just FOMO or just trying to join moving market. Exactly. Yeah. And for me in the beginning, like when I first started learning ICT concepts, I found it extremely hard to even take 3 trades per day. I'm like, okay, 3 trades per day, I should be fine. Now I'm at a point where I'm like, if I take 6 good trades per month, I'm fine. Like, so you have this kind of paradigm shift of how often do you have to trade? And a lot of the good traders, you see, they're not taking 16 trades per day. Like if you take 1 to 2 trades per week that are good trades, that's all you need. If you take 5 to 6 good trades per month, that's all you need. So you said MXM is higher probability with 830 news. I'm not specifically saying that, but everything is a market maker model. So saying the market maker model is higher probability with 830 news is like saying, really anything. Oh, there's going to be fair value gaps in 830 news. You already know that. So not specifically that market maker model, but for my specific model, I see that 830 news produces the most easily readable market other than no news days. So there's specific profiles that I like to look for. Are you saying that at those times is when the SMR is likely to occur for the model? I don't know what I was talking about then. If you can remind me. Oh, yeah. 8:30 and 9:30 10. Yeah. Right. Preferably, I like to look for an SMR between 9:30 and 10 o'clock. And then I trade after that. There's an SMR at 8:30, then you could look for 9:30 continuation. But that's a whole different model. Another mistake on new traders is they want to milk the whole move in trying to trade the highest high and the lowest low without aligning the market to create that highest high or low low to make them mistrade a lot. Yeah. I mean, that just comes from FOMOing in too, because they don't have a model. So like trying to capture the things. FOMO a lot of times comes from not having a model. Like if you know, okay, I need to enter here and there's no other way I don't get in. If it starts to leave without you, who cares? So be it. That's part of it. And you got to get comfortable with that. But yeah, I agree. Regarding to the amount of trades a person is also influenced by the prop firms as they try to pass in a month and not pay the rebuild fee. That is true. I'm not saying that's not a possibility. I think you can, like a month, 100% is doable. 20 trading days, right? And if you split it up, it's definitely doable. I would say if you give yourself 2 months, if you give yourself 8 weeks, I guarantee, okay, I don't guarantee you, but it's so much easier mentally, and you can actually use proper risk management than trying to pass it in 2 weeks or a month. You can do it. I'm not saying it's impossible. I've done it before. I've passed evaluations in a week. I pass them in a month. I pass them in 2 months. And I'm telling you, by far the easiest one to do is the 2 months because you can actually manage risk properly. If it's a really good, like a really good one, not really good one, a really good way to pass in a month is you have to wait for the specific time of the year, like April or maybe September, October. But 2 months, yeah, you have to pay another rebill, but would you rather rush it and then try and pay 4 rebills because you failed the account, or would you just accept, okay, I have to pay this fee, this fee here, and then I know I have to pay another rebill. It sucks, but I'd rather just get through the 2 months than try and rush it and then I fail because now I've put this pressure on myself where I need to make it now. I need it now. And that normally will, once you accept that, okay, it's gonna take longer, it's fine, and you can deal with it. And it's not the end of the world that you don't pass it in 4 weeks, or you don't pass it in 2 weeks. No one is gonna come up to you and slap you because you didn't pass it in 6 days. It's an illusion. This is what we was talking about before. It's an illusion that you place on yourself that you need to do it in this amount of time. No one is telling you that you need to be doing it that amount of time. It's you thinking it. And what's the illusion based off of? Fear. Maybe your fear is you'll compare yourself to people who have passed the evaluation in that amount of time. Or you think that other people will start asking you questions. And then you realize, okay, if you look back, how many times have those irrational fears and those illusions actually come to fruition and they've prospered? They haven't. They never have. It's always just the anxiety that holds us back. And what I'm talking about, of getting out of the way of yourself and just letting it happen and trusting the process, then you start to succeed and you see the progress that you're looking for. When you think about fear 24/7, it's going to come into your life whether you want it to or not. And that comes with going back to what we were talking about before, of reprogramming your subconscious mind. So if you want to do that, first of all, I'll just type these books up. So The Mental Game of Trading, that's going to be directly trading related. The Greatness Mindset is the book I'm reading right now, and I think it's really beneficial if you're not self-aware about how you think. The Greatness Mindset is going to be beneficial for that. And then Atomic Habits, I guess, is also good. There's some podcasts as well, like obviously ICD's podcast is going to be good for that. And then even something like there's a podcast called the Founders Podcast, which basically this guy will read autobiographies from specific multi-million and multi-billion company founders and how they think and how they approach problems, because this is technically a business, right? It's just a self-owned business. And when you look at it like that, of okay, what are the problems I have to face, and you approach problems with an opportunity mindset instead of a disappointment mindset, it becomes much easier, because every problem that you have should be looked as one step closer to being where you want to be. If you kind of push the problems away, you're never going to get to that point. You have to address the problems head on, find a solution, apply the solution, and then figure out what you need to change and tweak as time goes on. Power of the Subconscious Mind. Yeah, that's also a good book. I haven't read it personally, but a lot of people say it's quality when you're trying to reprogram how you think. But I'm a strong believer in reprogramming your mind. So if you can figure out how your subconscious thinks and then apply it to them, now this is how my conscious thinks. Trading is all just a mental game when it comes down to, once you understand the price action and the fundamentals, all a mental game after that. So if there's no more questions, I think we'll wrap it up there. I've been yapping for a long time and I'm extremely hungry and I want some coffee. So the stream recording will be posted later today. I'll send the the unlisted link into YouTube videos, and you can find the recording in there. I'll try and ping everyone when it's out, so if you don't want to miss it, it'll be there. But if you have any other questions that were not answered, and if I missed it, I apologize. Just shoot me a DM. I'll try and answer those all today. I'm not going to be on Discord tomorrow. I'm going to try and just take the day off. So I'll try and get to all those by today. By tonight, you can expect a response. But I appreciate you guys joining and sticking around and hearing me yap for a good hour about psychology. I know it's sometimes annoying, but I mean, to be honest, if you're in here just listening to this, every single one of you have exactly what it takes. So no doubt in my mind, like if you're sitting here listening to me talk about psychology, like you'll be fine. It's just a matter of time before every single one of you succeed, and I'll see all of you in a meetup at some point, like in 2025, 2026, and we'll all kick it and look back at this and just laugh because, you know, this is where we were, and then now here we are. So anyways, enjoy the day. It is the weekend, so do the things that are necessary to succeed, but at the same time, please, you know, do the things that are enjoyable in life so you can actually have the relationships still when you're successful in trading that you can provide for those people and hopefully take care of them. So yeah, I'll see you guys hopefully on, do you believe in synthetic indices? I do not. Use proper indices. So NQ, not NAS, not US 100. Anyways, so I'll see you guys, Lord willing, on Monday or Tuesday if you're in tier 2. Otherwise, I'll see you guys next weekend for the backtesting stream. So take care and stay safe. Peace.